Grains and oilseeds have come under renewed pressure, with markets correcting after hopes for support from the Fed and the latest WASDE quickly faded. So what exactly drove this correction, and where does the market go from here? I'm Johanna Bota, and joining me today is StoneX's VP of Clearing and Execution Sales, Bertrand Oesterle. Welcome, Bertrand. Hope you had a nice morning today. I want to begin with the big picture. What caused this latest correction in oil, seeds, and grains?
So over the past week, we've had two main elements coming to drastically put pressure on our markets. First of all, last Friday, Trump and Xi had their phone call, and that phone call focused mostly on TikTok rather than on grains and oilseeds, and corn and soybean were not mentioned. So that means that China is not back onto buying US origin, and it pressured markets because it was not addressed.
Okay.
In a sense, the can is kicked down the road for later on. So Trump was quick to say that he may meet Xi at the APEC meeting on the 22nd of October in Vietnam. If those discussions don't take place, then it would be kicked down the road even further when Trump may visit China early next year. So that's not what the market wants to hear. That's not what US exporters want to hear. So that was the first element. And at that time, we looked at the soybean exports, which were basically 19% behind the pace that we require to get to the USDA annual figure. Now, to make matters worse, early this week, the Argentine came in to say that they are removing their export tax for grains and oilseeds, and that is huge. So basically, the Argentine export tax on soybean was 26%, on soybean oil 24.5%, on corn 9.5%. It's now nil. So that means that suddenly you take off those taxes off the price, and it makes the Argentine exports much more competitive. So one of our US colleagues, for example, was saying that in terms of pricing mechanism, it's about $3 per bushel less in soybean and about $0.50 less in corn. Now, following those two elements, especially following the Argentine decision, which is to basically rebuild their own dollar reserves for the central bank. So the removal is up to the 31st of October, or up to the point where they rebuild $7 billion worth of reserves, which if I put it in soybean alone, that would be an equivalent of 19 million tons. It's just to show the magnitude of it. So China took advantage straight away, and on the day after the Argentine removed the export tax, China came in to buy some 600,000 to 1 million tons of Argentine soybean. So that comes at a time when previously we had mentioned the August imports from China, which were 12.28 million tons. It's a record. Out of those, 85.6% is Brazilian. So now for September, we're going to see China continuing to buy a majority of its soybean from South America, so Brazilian and Argentine. It also comes at a time when the Chinese have been buying other oilseeds from elsewhere. So they bought 540,000 tons of Australian canola. And also they've added some of the GMO varieties to their own growing list in soybean and corn. So 2 varieties for soybean, some 96 varieties for corn. So their domestic production may increase. It may reduce their imports, and they're importing, in any case, more Southern American. So it bodes pretty ill for the chances of the US in the ideal export window of September to January to have a chance to participate.
Yeah, it sounds like China's really taking advantage of everything else that's out there right now. So didn't Paris and Chicago manage to bounce off the lows from yesterday? So why would markets rally if the fundamentals are bearish?
So that's correct. If I take, for example, Paris wheat, the DEC 25 Paris wheat made a new low yesterday, 187.75. So it was just one tick below the previous low of 188. So yes, we did go down, but we rallied back to 190. And as I walked into the studio this morning, we were around also 190. So the bulls in a way feel that there is a chance to continue the consolidation between the 190, 193.5 mark that we've seen recently, despite the little blip down to a new contract low on those bearish news. And the reason why we've had a bit of a consolidation, a bit of a bounce, is because there's three other elements to take into account. And those elements are basically drought considerations, demand consideration, and also talks in the US of lower yields and potentially in parts of Europe.
Okay, so walk me through each reason. Let's start with yield concerns.
So we had mentioned that the EU maize had been affected by bad weather. When we look at the Agrimaire figures, they're 62% good to excellent for the French maize crop. So that's been stable for the past 5 weeks.
Yeah.
But when we look at the European figures from Mars, the yield indications for Europe for maize are now at 6.88 tons per hectare. That's down from 6.93 the previous month. And that's the second monthly cut from Mars.
Okay.
More importantly, when we look at the US, there's been an awful lot of talk about yields. So the harvest has started in corn and soybean. It seems that farmers have started by the worst yielding areas, and some people are making noise about the fact that maybe the yields will be worse than last year. So when we look at corn, 179.3 bushel per acre last year, we were starting with an August figure from the USDA at 188.8, that was revised down to 186.7. There's a big gap between the 179.3 and the 187 or 188 mark. Yeah. So generally speaking, people are tending to think that we're getting closer to the 180 mark and closer to the 50 mark or the 52 mark in soybean in terms of yields. And we're going to have to be cautious over the next few weeks as to how the harvest progresses and how we get to the good areas to find out if they have indeed better to record yields that come to make up for those bad starting yields, and where we get in terms of final average yields. The impression at present is that the USDA is going to cut those yield estimates from now all the way to January on the WASDE reports. And when we look at the crop conditions that came out on Monday, it is somehow confirmed the crop conditions in the US are worsening. They are 66% good to excellent in corn, so that's still up from the 58% 5-year average, and in soybean they're 61% good to excellent. That's just 3% above the 5-year average now.
Okay, which brings me to my next question, because you also mentioned earlier drought. So what's going on there? So
there's 3 regions in the world where drought is being mentioned. The first one is in the US winter wheat area. 44% of the area is in drought condition. Then we've got Turkey, which is telling us that they've got a severe drought at present. It is the worst in 52 years of records, and parts of southern Russia are also too dry. Now, we're at the start of winter. Rain will come, but we're starting from a very dry point of view in those areas.
Okay, and the last one you mentioned was demand. What's going on there?
So demand's been very interesting, and I think that's the element that's going to comfort our bulls who want to see a continuation of the consolidation that they've been talking about for the past 2 weeks. When we look at soybean, that's where the problem is. We don't have China. But from a futures point of view, we've seen a very decent amount of soybean or soybean meal demand on futures from North African participants. And on the international scene, we've seen a meager tender of 180,000 tons from Pakistan. Now, in parallel, we've had some good demand in corn, and that's what the US have been trying to make as much noise as possible about. So, for example, the Mexicans have bought some 553,000 tons of corn from the US over the past week, and that goes along some very regular buying from South Korea, for example. And we've also seen Iran's SLAL buying some 120 to 180,000 tons of corn. And when we finally turn to wheat, there's been some good tenders as well. So we've seen some feed compounder buying in Paris futures, for example. But on the international tender side, we've seen regular buying from Jordan. We've seen some buying from South Korea of US origin, some 110,000 tons over the past week. More importantly, we've seen Algeria buying some 460 to 600,000 tons yesterday. And we've got also on the feed barley side, the Turks looking to buy 255,000 tons. So to try to sum it up, yes, we've had two very bearish elements coming this week, but they are bits and pieces of bullish potential, and it's going to be that battle between those two elements to find out if the bulls get to continue with their idea of consolidation or if they're going to have to abandon it.
I see. Well, only time will tell. Thank you, Bertrand, for your time. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.